You're watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Welcome into another edition of Inside Automotive right here at cbtnews.com. Joining us now is Ryan Kerrigan, Managing Director of Kerrigan Advisors. You've seen him here before on CBT News. In fact, you've seen him everywhere in retail automotive because he speaks at so many conferences and so many dealers rely on his advice. So thank you so much, Ryan, for taking the time out of your schedule. I saw your recent op-ed in Automotive News about the failed EV rollout. What inspired you to write this column?
Yeah, well, Jim, good to be here. Thanks for having me. I was just sitting one day kind of reading about just sort of the EV program going off the tracks and just reflecting, how did we get here? Like, how did we get to a place where our OEMs jumped into this EV future so aggressively? The domestic OEMs probably spent over $100 billion in accelerated R&D. Globally, I estimate the industry probably accelerated $500 billion in R&D to push out products that nobody wanted. And those of us in the market had a sense for this was not going to probably work out anywhere close to as planned. And it just got me thinking about where and how the decisions were made. The decisions were made in the most centralized place possible. It was a mandate that came out of Washington, D.C., very, very far removed from the consumer, from the marketplace. And we relearned the lesson that I think we've all known, anyone that have studied sort of history and economics, and that is centralized economies do not work. Right. And here we are trying to take these sort of failed ideas, push them down, wildly costly. I mean, really, really costly.
Yeah, you suggest that these policies may have held back the U.S. in the longer term for in the EV industry.
I do. It's a little counter-conventional. The idea is we need to push our OEMs into the EV space, but look at what startups can do. Our best allocators of capital are venture capitalists, startup companies, those very dynamic ecosystems. Yeah. So by forcing the big OEMs into it, what are we doing? We're taking out all of the space, all the oxygen for the next generation of companies that may well have popped up in the United States. And so I think, interestingly, we may have done ourselves some unintended damage. And in the op-ed, I used the analogy to AI. If you look what's happened in AI, for example, in the last number of years, I mean, literally trillions of dollars of market cap have been created in a very short period of time. Yes. And that was largely hands-off. I'm not saying that the government and R&D didn't have a bit of a role in this, but generally speaking, those companies worked on it, allocated dollars in their own time frame and brought things to market that actually found a market. And if you think about the trillions of dollars of value creation in AI, allowing the market to work much more organically versus the hundreds of billions lost in sort of accelerated R&D expense for EVs, it's just a night and day difference in sort of outcome.
Do you think that these OEMs got ahead of themselves with regard to that we better be doing it because the competition's doing it, and we forgot to look at what the consumer wants? I mean, it almost just seems like the momentum got going from all of these different players without ever anybody, asking the consumer, if we build these for this much money, with these many charging stations, are you going to buy them? It just looks like it was a ready, shoot, aim approach.
Yeah, I mean, to be fair to the OEMs, they didn't have a lot of choice. I mean, it was the mandate coming down, starting in California, then going to Washington, D.C., was that they were going to have to do it. And there was just this sense that there was a higher power, a higher wisdom that knew how this was going to play out, and the OEMs just had to get along. And so I think it's hard to fault. I think the OEMs did it in lockstep, very much given that top-down pressure. Yeah. But there again, for those of us that have been sort of watching this play out, I don't think we're shocked by the outcome. It's certainly maybe gone worse than people had anticipated. Sure. We've actually seen shrinking EV market share. Yeah. It looks like the second quarter EV market share came out at about 8%. It peaked in Q4 of 2023 at just slightly over 8%, then shrunk in the first quarter. But here we are with a huge set of products being forced in the marketplace, and still EVs are at about 8%, and at this point, not growing. Yeah.
So how does this roll out from here?
Yeah, we just did a very substantial survey of OEM executives, and it's really interesting. Over 80% of OEM executives, we do this anonymously. We want them to give us their honest feedback,
Sure.
have said that they are delaying their EV plans, that over 2/3 said their company will in no way reach the targets that they've mentioned. And over 80% of executives said that they are currently, their organizations are discussing contingency plans to continue to roll out ICE and extend ICE platforms. So clearly this is not going as planned. And it leads the OEMs to be in, I think, a very tough spot because they've made these public pronouncements. They've spent a lot of money. They thought that perhaps we'd go in for some big transformation. And then they got to hold back. And now they've got to sort of push the EV thing, but then they need to protect the core business and stay in tune with consumers. It's going to be a very nuanced walk for OEMs for the next number of years.
Yeah, for sure. Let's shift gears and talk about current financial performance. What's the latest news there?
Yeah, just in the last couple of weeks, all the publics reported on Q2, so we've got a lot of data out on that.
Yep.
And it was not a particularly good quarter. I'll start with a positive. The positive is that aggregate revenue for the 6 companies, the public companies that sell new cars, was up 4%. So they're finding ways to grow the pie. That's a good place. However, across the board, the earnings were down 37% quarter over quarter, so a very substantial reset. And there were a lot of things going on there. We had, for example, Asbury was down the most. They took an impairment on some assets. They have not announced which assets those were yet. Multiple companies just talked about just tougher operating environments, just SG&A increasing, gross profits coming down. And so again, a real mix, but certainly down quarter over quarter.
How's it impacted stock prices?
Yeah, and that's starting to reflect into stock price. So, for example, now we've had a couple of crazy days in the stock market, but if I just go back to last week, when we ended the second quarter last week, the S&P was up 15%. Our industry was only up 4%, the Kerrigan index, that is. And so we are lagging a little bit. Q3, and in my experience, August and September tend to be some of the choppiest months of the year. We'll see how this all plays out in Q3, both from a macroeconomic perspective, stock market perspective, and then we can talk about the Kerrigan index. But through last week, we were lagging the S&P by quite a bit.
And how much of this, this situation was due to the CDK issues?
Yeah, that was referenced. CDK came in. Huge issue for the industry that we all read about. And the publics, immediately put out sort of notes to the street, notes to the shareholders. This is material. At this point, I've seen 2 announcements. Asbury said that CDK probably cost them $1 per share in the second quarter, and AutoNation said over $1.50 per share in earnings on the second quarter. So material, and we'll see. They may well be more charges in Q3 because it didn't get resolved immediately, and there may be some pass-through. So we'll see how that plays out, but absolutely material. Yeah,
definitely. Any particular franchises making interesting moves?
Yeah, I've got sort of a negative and a positive. I guess I'll start with a negative. So no surprise to our dealer friends watching the show, Stellantis continues to be in a world of hurt. They've not yet hit bottom, arguably. I think they will, by the way. But they just continue to really struggle. Again, just came out in the second quarter, Stellantis revenue, this is OEM revenue, is down 21% in North America.
Wow.
It's a really substantial
That's huge. Yeah.
And you look at, for example, inventories across the board, and Stellantis dealers are just absolutely buried in inventory. You may have seen the story. There was a substantial Stellantis dealer that was so buried in inventory that he gave his franchise back because that would then trigger a repurchase of inventories. He's not the only one to have done this, but he did it. He had $180 million in inventory. They are now disputing, I think there's probably the early stages of litigation. Stellantis saying they're not bound to take this back. The dealers arguing that they are. But, I mean, floor plan of $180 million, that tells you something.
That is unbelievable. That's huge.
Yeah. And I think you and I touched on this last time, but what's so interesting about Stellantis, we all know where they play, we know where their brands are, but in the last 5 years, they have increased ASP by 50%, which is more than any other OEM out there.
Wow.
So part of this is a little bit by design, not sort of the negative results and the piling up of inventory, but you always take a risk. If you start pushing up product price, there is a risk that you're gonna meet resistance. And no one's been more aggressive in pushing up product price in the last number of years than Stellantis. So again, you sort of have to balance that in a little bit too.
Yeah, for sure. So through all of this and all of the items that you just mentioned, how has the buy-sell market held up?
Yeah, very strong, very strong. So again, we've got preliminary first half data and we continue, and certainly our firm represents this as well. We continue to be incredibly busy. Just shy of 200 transactions in the first 6 months of the year. I think there's 188 transactions. That's down just a little bit over last year, but the total number of franchises sold has actually gone up. And so 378 franchises sold in the first 6 months of the year, which is a record. So buy-sell activity remains very, very strong. You've seen announcements coming from Kerrigan Advisors. We certainly have had the ability to continue to announce deals, and we certainly know what kind of like the next 3 to 4 months look like, and they'll give you a series of announcements. So very strong in the buy-sell.
From your perspective, what's on the horizon for auto?
I think the big thing now for auto is the macroeconomic stuff. So now we're seeing the classic interplay between economic growth, unemployment, interest rates, this great big macro play that's been coordinated by the Fed, where they felt the need to bring down inflation dramatically. We are not a country that's accustomed to inflation. Our consensus as a country is that inflation is very, very bad for most Americans. I certainly would agree with that. So they jacked up rates. It's taken a while. But now we're starting to see this, hence all the jitters in the stock market that we just talked about a few minutes ago. And so it's sort of going according to plan. I mean, at some point you're going to see unemployment start to tick up. You're starting to see economic activity go down. Interest rate, that was the idea of raising interest rates by 500 basis points. So I think in the near term, those big actions, clearly a slowing economy, not good for car dealers. However, we're such an interest rate sensitive industry that, if we start to see interest rates dip, there's no question we're going to start to see some cuts in 2024 based on where things stand today. We may get propped up. And so maybe, net auto retail ends up coming out okay, even with a little bit of slowness.
Sure. What's your take on the next cut? Do you think it'll be a quarter or greater? Maybe a half?
I haven't read anything particularly insightful one way or the other, but I know that the consensus until this week had been a quarter. The markets have been roiled, and I've seen two things out there in the news in the last 48 hours. One is maybe it's not a quarter, maybe it's 50 basis points to your point. And then one prominent financial analyst that a lot of folks follow has said that the Fed ought to do an emergency rate cut and not wait till September, but convene a meeting in August. So we'll see. So clearly those are very, very different messages than we've been seeing or hearing for the last number of months and quarters. So it's there's breaking news on that front.
Sure. What do you say to those out there that say, well, the market was cranking along at such a fast pace that it needed a correction like this, and that's all that this is, and there's no reason to be talking about recession right now?
Yeah, I'm sympathetic to that based on just where I stand. I mean, it just sort of anecdotally about what's going on in the economy. I know that we've had record travel days throughout the summer where, record number of Americans on flights traveling in airports, what have you. A lot of record spend data has come out in recent months. So certainly, just in the recent past, this does not feel recessionary. On the other hand, we had this just massive run up in certain parts of the financial markets, right? So FANG, NVIDIA, what have you. And so, I think it's very possible. Maybe this is just the market that's overreached and needs to reset. That's healthy. That's appropriate. May not be impacting Main Street and sort of the real American economy in the way that I think financial commentators easily jump to, because they're biased, right? They're sitting there in the financial centers. They're seeing it all play out. They assume it must be real in the rest of America. We may not be noticing.
Right. Yeah, good point. Ryan Kerrigan, Managing Director of Kerrigan Advisors. Thank you so much for joining us on the show. I know that our dealer viewers and managers out there in the industry that are fighting the good fight every day and trying to get cars sold get a lot out of your business with us. So thank you so much. Really appreciate it.
Thank you, Jim. Good to be with you.
Thanks for watching Inside Automotive with Jim Fitzpatrick.